Are you helping take care of a parent, spouse, child, or family member with a medical condition or disability? If so, you could be missing out on a valuable tax credit from the CRA called the Canada Caregiver Credit, also known as the CCC. A lot of Canadians are supporting family members every single day. And here's the surprising part. Many Canadians qualify for this credit and don't even realize it. In today's video, we'll explain: what is Canada Caregiver Credit? Who can claim the Canada Caregiver Credit? What conditions may qualify? How much you may be able to claim? What documents you need? How to claim the Canada Caregiver Credit? And how Family Tax Recovery may help review past tax returns for missed caregiver credits and DTC-related benefits. Let's get started. What is the Canada Caregiver Credit? The Canada Caregiver Credit is a non-refundable tax credit from the CRA. It's designed to help Canadians who financially support a family member with a mental or physical impairment. This program is closely related to the Disability Tax Credit, also called the DTC. If someone in your family is already approved for the DTC, you may also qualify for the Canada Caregiver Credit, depending on your situation. Now remember, this is a non-refundable tax credit. That means it reduces the amount of income tax you may owe, but it does not create a cash refund if your taxes are already reduced to zero. Still, for many families, the savings can be very helpful, especially with today's grocery prices, because apparently lettuce now thinks it's a luxury item. Who can claim the Canada Caregiver Credit? You may qualify if you support your spouse or common law partner, or another dependent with a mental or physical infirmity. Important: you cannot claim the Canada Caregiver benefit for dependents, including a parent or grandparent who do not have an impairment in physical or mental functions. The CRA says a person is considered dependent on you if they regularly rely on you for basic necessities like food, shelter, clothing, and the dependent may include your child or grandchild, parent or grandparent, brother or sister, aunt or uncle, niece or nephew. In some cases, your spouse's family members may also qualify. And for certain relatives, they must have lived in Canada at some point during the year. What conditions may qualify? The CRA uses the term mental or physical infirmity. This can include many long-term medical conditions or impairments that affect daily living. For example, cognitive impairments, severe anxiety or mental health conditions, mobility limitations, chronic illnesses, developmental disabilities, vision or hearing impairments. And if the person already has an approved disability tax credit certificate, that often helps support the caregiver credit claim too. How much can you claim? The amount depends on your relationship to the dependent, their income, your tax situation, and whether other credits are being claimed. Let's simplify the main amounts. For a spouse or common law partner, you may be able to claim $2,687 on line 30300 and up to $8,601 on line 30425. For dependents age 18 or older, if they qualify as an eligible dependent, you may claim $2,687 on line 30400 and up to $8,601 on line 30425. You may also claim up to $8,601 on line 30450 for other infirm dependents age 18 or older. For children under 18, you may be able to claim $2,687 on line 30500, and in some situations, $2,687 on line 30400. Special rules may apply if you pay child support or share custody arrangements. So it's important to review your specific situation carefully. What documents do you need? Here's some good news. When you file your taxes, you usually do not send documents right away. But you should keep records in case the CRA asks later. The CRA may request a signed statement from a medical practitioner, details about when the condition started, and how long the condition is expected to last. For children under 18, the medical statement may also need to confirm The child depends on others for care long term and requires significantly more help than other children of the same age. Now, here's something important many Canadians miss. If the CRA already has an approved Form T-2201 Disability Tax Credit Certificate for that person, you may not need additional medical statements for the same period. That's one reason the DTC can be so important. How to claim the Canada Caregiver Credit. To claim the credit, you complete Schedule 5 on your tax return. This form helps calculate spouse amounts, eligible dependent amounts, and caregiver amounts. Then the totals are entered on different tax return lines depending on your situation. Some key lines include line 30300 for spouse or common law partner amount, line 30425 for caregiver amount, for spouse or eligible dependent age 18 or older, line 30450 for other infirm dependents age 18 or older, line 30500 for infirm children under 18. And this is where mistakes can happen, because each family situation is different. Sometimes, the wrong line is used, the credit wasn't transferred properly, or the credit was missed completely. And yes, CRA tax rules can sometimes feel like assembling furniture without the instructions. How FTR may help. This is where Family Tax Recovery may help. Family Tax Recovery is a Canadian firm that specializes in reviewing past tax returns, DTC filing, identifying missed credits, deductions, and possible refunds. They've built a strong reputation, including a 4.4-star rating on Google. FTR performs detailed retroactive reviews of up to 10 years of tax returns to identify opportunities that may have been missed. That includes missed Canada Caregiver Credits, missed disability tax credits, incorrect filings, missed deductions, and possible tax adjustments. Even if someone in your family was already approved for the DTC years ago, there may still be caregiver credits that were never claimed properly. Family Tax Recovery helps by reviewing each tax year individually, applying the correct CRA rules for that year, ensuring claims are properly documented, and identifying adjustment opportunities where available. Because sometimes it's not about filing again, it's about fixing what was already filed. According to FTR, there are no upfront fees, and the initial review is free. If you'd like to learn more, you can sign up using the link in the description below. If this video helped you better understand the Canada Caregiver Credit, make sure to like, subscribe, and share it with someone who may benefit. Thanks for watching, and we'll see you in the next video. Optional disclaimer. This video is for informational purposes only and does not constitute tax, legal, or financial advice. Always consult with a qualified professional or the CRA for your specific situation.